Welcome to Fear and Greed, business news you can use. Today, equities, cryptocurrencies and gold sell off as investors reassess the outlook for risk and interest rates. ASIC boss Joe Longo warns that private credit faces new rules if it doesn't clean up its act. And Goodman Group warns on the surge in AI-related infrastructure. Must be a day for warnings because US polls show voters are tiring of Donald Trump, and how smartwatch data and AI are combining to uncover heart problems. It is Thursday, the 6th of November, 2025. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. Something for everyone this morning, I think. We've got regulators, we've got gold, we've got US voting, all sorts of things.
Oh, it's a real mix today, Sean. Let's start with the main story. Seems a logical place to begin. The local share market fell to a 6-week low yesterday as Wall Street's tech titans tumbled and other asset classes, including Bitcoin and including gold, dropped as investors really get nervous about high valuations.
Wasn't what you'd call a bloodbath, but there was selling everywhere on the back of a fairly disparate bunch of events. Looking locally first, mining stocks pushed the local share market to a 6-week low yesterday morning with concerns about competition in iron ore out of Africa. Always wanted to use that phrase, out of Africa. Competition, iron ore out of Africa, weighing on BHP, Rio Tinto and Fortescue Metals Group. There were media reports that China plans to develop a mine at the world's largest untapped iron ore reserve in Guinea. That would certainly hurt the local miners. Local tech stocks were also sold off following a sell down on Wall Street, particularly of those mega tech caps. That's amid renewed concerns about valuations. An index of the Magnificent Seven tech stocks, Nvidia, Microsoft, Apple, Meta, Amazon, Alphabet and Tesla fell more than 2% yesterday, though the biggest loser was actually the current market darling on Wall Street, a data software group called Palantir Technologies. It shed 10% on nervousness about its AI outlook. It had been up 170%. So you're just sort of seeing that nervousness around tech stock valuations at the moment. And the prospect of no more rate cuts in Australia following the Reserve Bank Board's meeting on Monday and Tuesday of this week weighed on equities here. During the day, the market did fall by as much as 0.5%. It sort of pared back most of those losses by the end of the day. It closed down slightly to 8,802 points. Many investment analysts have warned of a bumpy end to the year. What's emerging is a slightly, well, it's probably more than slightly, it's a higher aversion to risk at the moment. Concerns over tech company valuations and receding expectations of rate cuts in the US and Australia, and that's pushing down asset prices all over the place.
Does this mean we're less likely to have a Santa rally this year, Sean? We've talked about Santa rallies in the past, and I just love to bring that up.
Yeah, quite the opposite, because if we, where are we? November, early November, if we fall for the next 4 to 6 weeks, surely that's just setting us up for a Santa rally.
Oh, great. Okay. Bitcoin. We need to talk about Bitcoin because that fell below $100,000 a unit for the first time since June, while gold and oil both fell. It was just falling everywhere.
It was. the cryptocurrencies actually were the ones that dropped most. Bitcoin was fetching just under $97,000, had fallen by about 20% from its peak of last month. It recovered somewhat to back to that about that $100,000 US a unit mark. The number 2 cryptocurrency, Ethereum, is the one that's really taken a fall. It's off 36% since its peak. Now, markets are fickle, to say the least. No surprises there, Michael? No. But in recent days, there's just been a sense that tech stocks and cryptocurrencies have been overvalued. Even gold, the ultimate safe haven asset, has been caught up with the price of bullion heading back towards $3,900 an ounce, down about 10% from its peak. Silver's off even more from its peak. Brent crude at $64 a barrel is also trading at low levels. It's 20% off its peak earlier this year. It's just a sense of unease in financial markets at the moment, Michael.
Why then is gold falling, Sean? If there is so much unease and anxiety and people are worried about kind of tech company valuations and things, why are we not seeing gold continuing to climb if that is the safe haven?
Because at some point, value matters. And with gold at $4,100 an ounce, that is expensive. It has never been anywhere near that. And so even though other valuations are sort of coming off, gold is just too high. And what's important here, I said right at the top, this isn't a bloodbath. We're not seeing selling. We're just seeing all sorts of asset classes getting lower.
Okay.
And that kind of means gold can get lower. If you saw a mega sell-off of tech stocks or of Bitcoin, then gold is less likely to fall. But you're not. You're just seeing across the board drops on valuation concerns.
Okay. I love for the fact, like when we're considering the fact it's not a bloodbath, you've managed to mention the word bloodbath twice now.
Yeah,
it's
great,
great,
isn't it?
It's
doing my best.
It's a ripper of a term. Now, the boss of the corporate regulator, Sean, Joe Longo, yesterday said that Australia's financial markets need to innovate or stagnate, and private credit in this country faces its own Minsky moments, suggesting a market collapse is a real possibility.
So you did some research on what a Minsky moment is.
Yeah. I've been learning all about the 5 stages of a bubble as defined by the economist Hyman P. Minsky. Which is, I found this.
Minsky.
Oh, yeah, I found this. Oh, yeah, I've got no idea what the P stands for. I'm assuming it's maybe Peter. Yeah, maybe. But about this, the fact that it's kind of displacement, boom, euphoria, profit taking, and then panic.
Yeah, I think the GFC. Normally, Minsky moments, sudden collapse of markets following a period of unsustainable speculative investing involving big amounts of debt. Now, I think Joe Longo is probably sort of at one end of the spectrum here. He said private credit is still small, there's time to act, but he put the industry on notice. They need to improve. Otherwise, the sector will face new legislative obligations. Longo was speaking at the National Press Club after the release of 4 different research reports into public and private markets. He said Australia needs to consider when a company is public or private and the rules for each. For example, if a super fund invests using member funds, so yours and my money, how should that be considered? If we're sort of retail investors, that's putting our money potentially into private sector investments. He also pondered why a biotech company with less than $10 million in turnover should have the same compliance as BHP and more than Sydney Airport, which is now a private company. So he's thrown a lot of stuff up in the air, Joe Longo, and it'll be interesting to see where it all settles. It'll take years to unravel, but certainly private credit seems to be in the sights of ASIC.
Hyman P. Minsky, did you guess that his middle name was Philip?
Yeah, I said Phil.
You were right.
Really?
Yeah. Well done.
Of course.
You are a student of economics after all. I suspect
That's
it was
right.
probably tucked away in there somewhere deep within the grey matter. Well done. Sean, we've still got plenty to come. Back in a moment with the rest of the day's business news. Sean, Goodman Group has reported a solid September quarter, and the data centre and commercial property group said development activity is set to accelerate in the second half.
But boss Greg Goodman warned that it's getting harder to build data centres, notwithstanding all the tens of billions of dollars being thrown around globally. When asked about the big tech companies throwing money at AI infrastructure, Goodman said there's not enough money in the world to finance the aspirations, and that's the reality, is what he said. There needs to be a bit of common sense in building good long-term products. It's kind of the opposite to what many of the tech companies are saying at the moment. Goodman reported a $12.4 billion of work in progress. 68% of that is in data centres. So obviously they're big into data centres. The plan is to lift that to more than $17.5 billion by the middle of next year. Goodman's share price fell yesterday, fell a couple of percent, maybe 3% by the close. A few years back, starting with COVID, moving into the AI era, we used to talk about Goodman all the time. It's like one of the hottest stocks on the ASX. The steam has well and truly come out. It's off 12% so far this year, one of the worst performing large caps. In fact, of the top 50 stocks, only WiseTech Global, James Hardie and CSL have done worse than Goodman over the past 12 months.
Oh, wow. So I find that staggering because those companies have had some really significant
serious issues.
Drops. Yeah. Okay, how about this one, Sean? More than $2 billion has been recovered for underpaid workers in the past 5 years, with over half the amount back paid by large corporate employers, according to the Fair Work Ombudsman.
The Ombudsman's annual report shows the agency recovered $358 million for more than 249,000 underpaid workers last financial year. Fair Work Ombudsman Anna Booth said that the FWO had delivered significant back payments to workers across the nation, holding employers to account. Last year also marked the Ombudsman's highest ever penalty in a court in a single action, when operators of Sushi Bay outlets in New South Wales, Canberra and Darwin were ordered to pay $15.3 million for deliberately underpaying 163 workers more than $650,000.
Now, we mentioned WiseTech just a moment ago, Sean. The former independent directors at WiseTech Global, who resigned en masse in February, says they've basically come out and said they are not being investigated by the corporate regulator.
Yeah, it comes as ASIC looks into potential insider trading by billionaire founder Richard White, former WiseTech chairman Richard Demery, along with former colleagues Lisa Brock, Fiona Pakpoy and Michael Malone, said they were interviewed by ASIC in March following their resignation. Since then, there's been no further contact with the regulator. Last week, WiseTech Global's headquarters in Sydney was raided by officials from ASIC and the Australian Federal Police as part of an investigation into trades made by White and 3 other unnamed employees.
Turning to international news now, Sean, in what has loosely been described as judgment on the performance of Republican President Donald Trump, polls in New York City, New Jersey and Virginia have all been won by Democrats, while a vote in California sided with a Democrat's proposal.
Yeah, I don't know what this, I said loosely when in this intro, but what's been described as a judgment, not even loosely described. The Democrats are cheering from the rafters at the moment. The highest profile poll was the mayoral election in New York City, where 34-year-old Zoran Mamdani, a Muslim who Donald Trump has been highly critical of, was voted the youngest mayor of the city in more than 100 years. More than 2 million voters cast a ballot. That's the highest turnout in the city since 1969. Last time there was a mayoral race, 1.1 million. So it's nearly twice that many. In California, voters agreed to a redistricting effort intended to partially neutralise a push by Trump to draw up more safe Republican seats before next year's midterm elections. So a win for Democrats there. And in New Jersey and Virginia, Democrat governors were elected. In the case of Virginia, the previous governor was a Republican, and the Democrats made significant inroads across that state. There was also a vote in Pennsylvania where Democrats kept control of the state Supreme Court. Undoubtedly a bad day for Republicans. Donald Trump responded, tweeting, I quote, "Trump wasn't on the ballot and shut down were the 2 reasons that Republicans lost elections tonight." I wouldn't say that's gracious.
No, not particularly. And I think you do need to read something into the fact that a number of these candidates for governor, the Democrats in particular, actually positioned their campaigns as an anti-Trump vote. Right. Yep. And so that you've got to read something into that, right? But I don't know whether the president is quite able to reflect upon that.
Yeah. I mean, the Zoran Mamdani, Trump actually came out a day ahead and said if you vote for him, then New York won't be getting as much federal funding, which I don't know how you can say that. I mean, it's almost illegal. But anyway.
What are you saying, that occasionally the president kind of shoots from the hip on Truth Social? Never.
Yeah, never.
Staying with Donald Trump, the fate of the majority of his tariffs is in the hands of the US Supreme Court, who overnight heard arguments following lower court rulings that they were issued illegally under an emergency law.
The tariffs have remained in place to allow the Trump administration to appeal to the Supreme Court, which of course is the highest court in the US. The tariffs in question are those imposed under the International Emergency Economic Powers Act. That includes a minimum baseline tariff of 10%, which impacts Australia. This is thus far the biggest test of Trump's power that's gone to the Supreme Court.
Now, how about this, right? Scientists have uncovered structural heart problems by using an artificial intelligence tool to vet smartwatch data in the latest advance in the fast-evolving field of cardiology diagnostics. We talk a lot about kind of AI and ChatGPT and kind of using it to speed things up in the workplace. This is kind of AI being used for the real benefit of mankind.
Oh, totally. The new technique found conditions including weakened pumping ability, damaged valves and thickened muscle, promising to expand the potential of wearable devices beyond detecting rhythm disorders. The work uses simple readouts of heart electrical activity, known as single lead electrocardiograms, that can be recorded by smartwatches without the need for anything extra. This is according to a report in the FT. The preliminary study was unveiled at the American Heart Association's annual scientific sessions, and according to its authors, has the potential to transform structural heart disease screening in communities. It could make early screening for structural heart disease possible on a massive scale using devices many people already own. Now, smartwatch heart data is already used to spot warning signs for atrial fibrillation and irregular rhythm. But what this study does, and it hasn't been looked at by peers, it hasn't been peer reviewed yet, so still ways to go. But it suggests that all these other issues can be diagnosed just using a smartwatch and AI.
That's pretty incredible. Okay, up next is the Fear and Greed Q&A. Your guest today is Kate Anderson from Now Infinity.
This is a great chat. We always talk about investing. We don't talk about investing here. We talk about setting up your own self-managed super fund and all the stuff you need to do except for investing. And there's a lot of it. So if you're interested in running your own self-managed super fund, if you have done, you might do in the future, well worth a listen.
Yeah, and this is part of the Class Ignite 2025. And Fear and Greed were actually media partners of the Class Ignite 2025 conference. And this is part of that one. It's a great chat. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is where you sign up for our free daily newsletter. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 6th of November, 2025. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great